Now we look at the adjustment for expenses. To calculate the current expenses by adjusting accrued expenses, underline accrued expenses, yeah. So the formula is rent expense equal to cash paid from a cash book plus closing accrued rent minus opening accrued rent. So this is the T account for expense account, yeah. So we may debit cash, debit accrued expense carry down. So you credit accrued expense brought down, and income statement in the credit side. So this is the way. To calculate the current expense by adjusting the prepaid expense, we will use the formula such as insurance expense equal to cash paid minus closing prepaid insurance plus closing prepaid insurance. Therefore, in a T account for expense account, we will debit prepaid expense brought down and cash. Then we will credit prepaid expense carry down. Okay, so the income statement for current expense is in the credit side. Now look at the adjustment of revenue. Okay, this is to calculate the current revenue by adjusting the accrued revenue or revenue receivables. Formula are commissions receivable equal to cash received plus closing accrued commissions plus opening accrued commissions. If we present the revenue account in T account, okay, so this is the way. We will debit accrued revenue brought down, okay, and the income statement is in the debit side. So at the credit side we have cash and accrued revenue carry down. To calculate the current revenue by adjusting unearned revenue, formula is rental revenue equal to cash received minus closing unearned rental plus opening unearned rental. In the account way of revenue account, we shall debit the income statement, okay, and unearned revenue carry down. Then the credit side will be unearned revenue brought down and cash. So now I do conclusions about the revenue account, yeah. So for revenue receivable, it is an asset. Okay, so when you balance brought down, is in the debit side. So revenue carry down is for revenue receivable carry down will be at the credit side. For unearned revenue brought down, unearned revenue is a liability, so it is in the credit side of revenue account. So the unearned revenue carry down will be at the debit side. The profit or loss statement will be at the debit side. Example, for rent revenue, receive cash 10,000. Okay, rent revenue, let's say the balance brought down is 1,000. Okay, so you receive 10,000, you record at the credit side. So, and your balance carried down is 5,000 at the credit side, so total is 15,000. Therefore, you got your profit or loss at the debit side 14,000. For expense account, prepaid expense is a asset. So if you have the prepaid expense balance brought down, is at the debit side. So your prepaid expense carried down will be at the credit side. Expense payable is a liability. So expense payable brought down will be at the credit side. The expense payable carried down will be at the debit side. So your profit or loss statement is at the credit side.